Are you watching the clock on America's debt bomb? Because it's ticking louder than ever. Debt has always been part of how America runs its economy. But today's debt is a different beast. Here's why. Before, the US borrowed money for 10 or 20 years at low rates. Investors trusted America, so they bought long-term bonds without blinking. That's changing fast. Now the US has to refinance much of its debt in the next 3 to 12 months, not years. At interest rates around 4% or more, that's 4 times higher than during the pandemic. This is a cash flow crisis waiting to happen. Imagine you refinanced your mortgage and your monthly payment quadrupled overnight. That's what's happening to America. When debt payments explode, the government has 2 choices: raise taxes or print more dollars. Neither one feels good. Higher taxes slow the economy. Printing money causes inflation. Look at bond funds like TLT. Investors are running from long-term US bonds. Countries like China have dumped over $30 billion of US treasuries. They're not eager to lend America cheap money anymore. That's why the US is forced to issue short-term debt, meaning they borrow now and repay in a few months. Then they have to borrow again. It's a hamster wheel, and it's getting faster. So how does America keep the hamster wheel turning? By convincing the world to keep lending it money. How? Through taxes and economic pressure. If the world buys US treasuries, interest rates can drop. If interest rates drop, America can breathe again. That's the game. And it's not just numbers on a screen. It affects real people. Higher interest rates mean higher mortgage costs, higher car payments, higher business loans. Companies may cut jobs to pay rising debt costs. Families feel the squeeze. Investors panic. Markets wobble. But debt is just one piece of this bigger pie. Wars don't just kill people, they move markets. The headlines scream about Israel and Iran. Many think it's far away, but oil traders don't think so. Neither do gold traders. When missiles fly, prices jump. Oil surged 36% in days when fighting began. People rushed to safe assets during war. But here's the twist. Safe assets aren't always what you expect. Most think gold is the answer, but history shows mixed results. During Syria's war from 2011 to 2014, gold fell 40%. When Russia invaded Ukraine in 2022, gold dropped 20%. During the US-China trade war in 2018, gold sank 15% at the start. So gold isn't always the winner. Let's talk about why. War pushes fear into the system. People want safety, but many choose dollars instead of gold. Because dollars are liquid, easy to move, used in global trade. Countries hoard dollars to pay for emergencies. Banks want dollars to stay stable. So while gold has appeal, the dollar often wins. Look at the dollar index. During conflicts, it usually climbs, because even in chaos, trust stays in the dollar. It's not about morality, it's survival. Think of gold as your safe box under the bed. But think of dollars as the money you actually spend. That's why in modern wars, the dollar often shines. Oil rules the world economy, because oil is energy. Without oil, trucks stop, planes stay grounded, factories go dark. Oil isn't just fuel, it's power. And oil trades in dollars. This is why the dollar stays strong, even when chaos hits. Years ago, Iraq tried to sell oil in euros. America reacted fast. Because if oil sells in euros, the dollar loses power. If countries stop using dollars, America can't print money as easily. That's a threat to America's core strength. So America protects oil's dollar link fiercely. Let's look at the Strait of Hormuz. It's a narrow waterway, only about 30 miles across, but over 20% of the world's oil flows through it. If Iran blocks it, oil prices could explode. Ships could be sunk. Insurance costs would skyrocket. Trade would freeze. Examples show how oil chaos hits nations. Venezuela lost oil revenue. Its GDP collapsed by 80%. Supermarket shelves went empty. Even toilet paper disappeared. Its economy fell apart. No oil means no modern economy. That's why countries hoard dollars, because they need dollars to buy oil. When oil prices jump, nations scramble for more dollars. That pushes up the dollar's value. Europe learned this in 2022. Russia cut gas and oil to Europe. Energy prices soared. Factories shut down. European companies moved money to America, seeking safety and higher interest rates. That's why during the Ukraine war, the dollar surged. Meanwhile, countries stopped buying US bonds. They shifted into gold. Gold became the second biggest reserve asset after the dollar. People paid double to own gold instead of holding dollars. But when oil prices spike, people sell gold to get dollars, so they can pay for oil. This creates a trap. Buy gold high, sell it low, then rebuy dollars expensive. It's a vicious cycle. Oil keeps the dollar alive, and America's secret weapon isn't lowering its own costs. It's raising costs for everyone else. Think about it. If you can't make things cheaper at home, make it too expensive for others to compete. Tariffs, oil prices, dollar strength. These tools force the world to pay more, while America stays more stable. Here's how it works. When oil prices go up, factories worldwide face higher costs. Shipping gets pricier. Raw materials cost more. Businesses have no choice. Raise prices, or shut down. Look at Europe during the Ukraine war. Energy bills quadrupled. Factories closed. Companies laid off workers. Germany's industry was hit hard. Porsche cars became more expensive. Samsung phones went up in price. People stopped buying. Meanwhile, American products stayed more affordable. Because America has domestic oil, its costs didn't spike as much, so consumers shifted to U.S. goods. If America restores tariffs this July, and the dollar growing stronger makes imports costlier in other currencies, this pushes global businesses to one decision: move factories to America, because inside America they avoid tariffs, they avoid crazy shipping costs, they might even get government subsidies, workers can become U.S. citizens, gain local benefits, so companies face a choice: stay home and risk bankruptcy, or move to America and survive. Production costs in the U.S. are high, labor costs are high, but if America makes everyone else's costs higher, suddenly, the U.S. becomes the cheaper place to build. The data proves it. After the Ukraine war, investment in U.S. manufacturing rose from 8.7% in 2018 to 50%. That's huge. This shows America's strategy: crush global costs, pull manufacturing back home, turn imports into domestic products, then sell those goods to the world, while the rest of the world struggles. So, surviving chaos means knowing what stagflation is. It's when prices keep rising, but economies slow down. People lose jobs, yet groceries cost more. Businesses struggle, but materials get pricier. It's not regular inflation. It's a squeeze from both sides: high costs, low spending. In stagflation, raising interest rates doesn't help, because costs aren't rising from demand. They're rising from supply problems, like oil shortages or expensive shipping. Higher rates crush businesses, push more people out of work. Then governments panic. They start printing money to save companies, to pay workers, to avoid riots. This printed money weakens currencies, making imports cost even more. It becomes a vicious spiral. The Great Depression offers lessons. In 1929, America raised tariffs. Global trade collapsed. Germany suffered first. Exports dropped 65%. Industrial output fell 40%. Unemployment hit 30%, and the world burned. Meanwhile, America grew stronger, selling weapons, selling oil, taking over global markets. The same playbook might be happening now. America doesn't need everyone else to thrive. It needs everyone else to struggle more than it does. That's how it preserves its power. Debt becomes cheaper to pay back during inflation. A dollar today might be worth 70 cents tomorrow. So America's massive debt shrinks in real terms. Printing dollars works if the whole world prints too, because currencies fall together. If everyone's money loses value, America keeps its advantage, and people flock back to U.S. assets, like bonds, because they crave safety. They accept lower returns, just to protect their cash. So America can keep borrowing, keep spending, and stay on top. Let's talk about where real money might. Chaos creates winners and losers. Gold seems safe, but it's not perfect. It can drop fast when people need dollars. Oil stocks can skyrocket when supply gets cut. Look at energy giants. They earn billions when oil jumps. Oil ETFs can rise fast too, but they're volatile and can drop if peace returns. Oil futures let traders bet on price moves, but futures are risky. One bad trade wipes out cash. Treasuries look safe, they pay interest, but bond prices fall when rates rise. Right now, many avoid long-term bonds because they fear higher rates ahead. Cash has power in chaos. It buys assets cheap when markets panic, but cash loses value in inflation, so holding too much cash can hurt over time. Some stocks thrive during crises. Defense companies get contracts. Energy firms profit from shortages. Shipping and logistics firms surge if supply chains get disrupted. Watch for big money signals. unusual trading volumes, insider buying. These can show where smart money goes. Learning to read these signs matters because big players shape trends. They often act before news hits headlines. Following them can mean catching waves early. But preparation is your real shield. Start by checking your cash reserves. Have enough for at least 6 months of living expenses, because if markets crash, you want time to think, not panic. Look at your portfolio. See how much is tied to oil prices or dependent on cheap shipping. Ask yourself if your assets can survive high inflation or sudden rate hikes. Watch the news for geopolitical flashpoints like the Strait of Hormuz or tensions in Asia. Because wars shift markets overnight, timing matters. Don't chase prices when fear spikes or sell too soon out of worry. Know your risk tolerance. How much loss can you accept without losing sleep? Because stress leads to mistakes. Stay patient, keep observing, and act only when you see clear signals. Volatility can bring wealth, but only for those ready to move calmly. Don't become a victim in this economic chess game. Crises can become opportunities to build new wealth. Like and subscribe to follow along. Share your thoughts in the comments. Share this video with someone you care about. I wish you good luck on your journey. Feel free to watch other videos.